Hi, I'm Ben Lader, the global markets strategist here at eToro. Welcome to our weekly look at global markets, what happened, what to look out for, and our two key topics this week, the reopening trade and the outlook for European equities. So what happened last week? US equities hit a new all-time high, their 39th of the year, before weakening a little bit at the back end of the week. This takes the year-to-date return to 16%. Basically, you've made a historic average annual return in only half the year. The other thing we saw last week was the kickoff of this very important second quarter earnings season. The US banks easily beat already very high earnings expectations. That was the good news. The bad news is all their stock prices weakened. And I think this speaks to the concern out there in the market on the sustainability of this broader GDP and earnings recovery as the Delta virus variant continues to go global and bond yields continue to slide here. This had a real impact on our first sort of theme of the week here, which is the reopening stocks. We put together two baskets, one for these reopening stocks, these sectors like airlines, like travel. So in that basket, stocks like Boeing, hotel chains like Marriott, on the one hand. On the other hand, we put together a basket of the sort of classic work from home companies, everything from gaming stock, Activision, Blizzard, through to Zoom. And what's interesting when you look at that is just how much further that reopening trade really has to go. Those reopening stocks have underperformed the work from home stocks by over 60% since the pre-pandemic levels. If you look at the earnings of the reopening stocks, they're at only 5% of the level that they were at pre-pandemic. So we think this reopening trade has a very, very long way to go, and it will catch up as vaccination rates continue to rise, as global economies continue to gradually reopen. But it's not a zero-sum story. We also think the work from home outlook is pretty good. I mean, it's much more of a structural rather than a cyclical outlook, and their performance has really held on in there. So for those looking to sort of get exposure to some of these themes, we have the travel kit copy portfolio on the reopening side, and on the work from home side, copy portfolios like the gig economy and remote work. So our focus of the week has really been Europe. European equities are within 5% of their 2007 all-time high. It's really been a lost 15 years for European equities. They've dramatically underperformed the performance in the US. But we do see that beginning to change here with this combination of accelerating European GDP growth and accelerating earnings growth, which we think is going to outpace the US over the next few years. And European markets are really set to take advantage of that, given that their valuations are about 25% cheaper than they are in the US, and European indices much more filled with these growth-sensitive sectors like financials, industrials, and commodities. So it may be worth having a look at some of these sort of diversified European ETFs like IEUR, for example. I mean, just remember that even though overall Europe's underperformed for the last 15 years, if you look at the individual markets globally that performed best in 7 of those 10 years, that was a European market. And so it's finally, week ahead, what are we looking at? So 3 things, I think. Firstly, the continued second quarter earnings. We're going to start to see tech earnings next week, Netflix, Intel, and on the social media side, Snap and Twitter. Tech earnings are always important, but I think particularly now, given that that's really what's been leading the market higher over the last month or two. Secondly, the biggest risk that's out there in the markets is sort of growth, GDP growth driving earnings growth. We're going to get global PMIs, these forward-looking growth indicators on Friday for the US, for Europe, for Australia, and for the UK. And I think they're going to remain pretty strong and hopefully begin to dampen down some of these growth fears. And then finally, we have the continuation of the space race. Blue Origin is set to go into orbit to follow Virgin Galactic. We think the space sector is just very interesting. A lot of sort of spin-off technologies that we've seen historically that are used in many other areas. And for the sports fans, we also have the start of the Tokyo Olympics. So that's it from me. I hope to see you again next week. Please subscribe to the channel And in the meantime, please trade safe out there. Thanks. Goodbye.